banking on the blockchain and institutional adoption. Does the road to mass adoption lead through institutions? Taking a look at the pros and cons. Moderated by Jaguar Advogal, Jaguar Lawyers. With Mayrev Harrell, COO Iconic. Alessandro Rocco Pietrocola, Astros Group. Kumar Gaurav, Kasha. And Sheldon Friedman, Hassan's international law firm, Gibraltar.
And I would like to welcome my esteemed colleagues here and the team over here. Each have their own perspective of how institutional adoption will help us get more banking services to this whole industry, either via funds, mutual funds or hedge funds, or just with working vis-a-vis the banks that are somewhat giving us a hard time besides a few of the other banks. We'll start this panel with May. Would you please talk to us about what are the current hurdles that we can face and cope with everybody here?
Okay. Hi, everybody. It's actually very exciting to be here and see so many faces after being closed down for so long. So first of all, I think what we're seeing now is something that a lot of us in the crypto industry and in the banking industry have been waiting for the last couple of years, and that's I'd say the bridging of the gaps between the traditional financial world and the new innovation that's being created on blockchain and crypto and the rest of the technologies that we're all surrounded by. And we're seeing a lot of interesting things. First of all, we're seeing that big banks are starting to look into crypto and Bitcoin, both as, I'd say, places where private investors or institutionals can come and buy these assets, which is something that a few years ago was just, a theoretical thing. And this is, I think it's less than a year that this is happening. And on the other hand, I think that that we're kind of like seeing the regulators asking themselves, is this the direction that we want to go? Is this something that was going to be helping the monetary system, or is it a type of something that would create a mess because of the instability of these assets? So I guess it could go in both ways.
Alex, maybe you can tell us a little bit about the costs and what are conflicts and the consequences of dealing with the banks, because we have more experience with creating mutual funds and hedge funds to cope with it, but you'd be to talk much faster and better about the cost of that.
Yeah, I definitely think that implementation of blockchain and adoption by institutional banks can only help to reduce the cost and move the thing faster than how is currently now. So the main point is the understanding of what is behind, because I think the banks and institutions are most worried about how to control the ultimate beneficial owner, how to control if this money are coming from some kind of different source and so on and so on. And blockchain, I think, can offer a very good opportunity to track everything. So the moment where it's going to be accepted, for sure, it's going to be better and better for everybody and probably cheaper for the end user as well.
Yeah, we'll be very helping for that. One of the steps to be doing that is creating, establishing mutual funds or hedge funds to be able to bring in institutional adoption, maybe in the back door or in the front door, in order to show the banks that if institutions are getting into that, meaning they'll have to accept their bank accounts, the fund's bank account, in a much easier way. Sheldon, maybe you could give us a light on that?
Sure. Great to be back at a live event. The reason that the United States is so successful in creating all the capital markets that buy a lot of what we produce is because the United States is by far the most regulated financial place in the world. There's more regulation in financial services in the United States and Canada than everything else put together. So institutional money in the United States has not been able to drive a lot of the blockchain development simply because regulation hasn't kept up. A lot of incumbent, well-to-do capital markets have too much to risk to expose their markets to a lot of the crypto and assets. And also the talent that it takes to create these regulatory regimes has to be developed. I come from a place in Gibraltar where we've been regulating crypto assets and token issuances for a few years now, and we're stricter than a lot of players like to really be. But that's really, I think, what's going to drive is as regulation catches up, and you have a company like 3IQ in Canada that just launched an ETF. It's $2 billion already. This is what's going to drive when the regulation catches up.
And what if we establish funds that will be able to receive fiat and use that to buy crypto, whatever kind of Bitcoin or any other the coins or tokens, less or more regulated, less or more decentralized, maybe, and do the investments by them, and then the funds will handle the crypto themselves. However, vis-a-vis the banks, they will only be able to, and will have to deal with the fiat. And getting those funds licensed is a hurdle, is a challenge. Maybe you can shed a light on the challenges on that and how you help with that.
I think it's a major challenge, even like as a bank for us or any other regulated institution around the world. The major challenge which we have to understand the source of fund, from where the money is coming. We cannot discount the fact that just because the fund is coming from an institution or its few billion ticket size could be legitimate. That's not the assumption on which we live, because maybe it's an institution. It's not that institution doesn't do money laundering, right? I think that's one of the bigger sources of money laundering. So it does not matter it's an institution or it's personal. We as a bank we as a banking institution, we have to be very careful from where the funds are coming. And that's where we have seen mostly the regulators coming back to us and asking questions about. We bank some of the biggest players in crypto industry, a couple of $1 billion we move every week, just purely into Bitcoin and then back for almost every top exchange in the world. So that's where we have seen the challenge. When these exchanges start receiving small ticket size from some of the exchanges, they have millions of customers. Like Binance have to shut down the US venture just because that the compliance which was the Binance was doing globally was not suitable for the Binance US. So that's where we see the biggest problem. I think as the industry is maturing, we have more and more companies who understand these risks, what are the risks, taking regulator more as a friend of them, not as an enemy, because the regulators are there to protect the consumers. They are not just to stop innovation. Yes, on this process, obviously regulation have to slow down because regulators are not that at the speed as we are a startup, because that's why we are called a startup. I remember we started in August 2019 when Barclays, which is the biggest institution, shut down Coinbase account. Now, Barclays is a very huge organization. It's not they don't have investment to put in to understand anything, compliance team, infrastructure, they have everything. But the pressure which they have from the regulator to make sure that not even slightest 1 or 2% transactions are coming from the wrong source, that's what takes their sleep. And that's the main reason they shut down this.
That's very true. So basically what we should be looking at is not see the regulator as an enemy, but as a friend, as you mentioned, and being able to be fully regulated and to supply the needs and the duty of the regulators to protect the consumer, the retail investor, using legal services, accounting services, audit services, all the means that we can present that being protective of the retail investors would be able to relax the regulators, and by that make us all being able to be banked much easier. Do you have a few more perspectives on that? The ways we can do that, May or Alex?
Yeah, wanna go? As I talked before, it's absolutely a key point. So I think that the moment where the bank managed to control and they are feeling safe, they shouldn't have any problem to implement the adoption of the blockchain. And I think in 3 to 5 years maximum, it will be something what we will even not need to discuss about, because it's going to be
Hopefully.
hopefully, of course, it's going to be the future that I would say it's already a present. I mean, so definitely.
I'm not sure about that.
You're not sure? Good.
No.
Go ahead.
No. I'm kind of like asking myself whether the financial services adoption of I'd say innovation in the areas of money are going to be happening because the banks are going to be enabling the usage of Bitcoin and other cryptocurrencies, or if they're going to be trying to supplement or say something, they're going to be they're going to be wanting to use central bank digital currencies and kind of selling them as the next kind of digital currency that they're going to be using. Because if I'm looking at the interest of both the regulators and the governments and the banks themselves, there's more value actually in enabling and using central bank digital currencies as opposed to using Bitcoin and other digital currencies. Why? Because the moment that you have central bank digital currencies that can be used as a payment service, you also get the data, okay? And therefore, it's more of their interest to come and say, we're allowing people to start paying with digital currencies and collecting the data, therefore they have more ability to create value from this data. Whereas if they just allow it as an investment tool, that's great. It's just an investment tool, it's volatile. We have options for that. We have a lot of different kinds of investment tools. I think it kind of like it depends on how you look at digital assets. Are they a source of an investment, or are they a source of payment? And I think that it's kind of like the scenario will be different on both of these types of which way you're looking at.
Thank you. The way to present to the banks that fiat or crypto-originated fiat has come from legitimate sources, not tax evasional ones,
of course,
not criminal-related ones, but I would call it relevant and normative and business-related sources is a challenge. We present to the banks the whole, I would say, the chain of the money and the whole method and the whole trail of the funds. It's one of the methods that we lawyers use or CPAs use in order to bank that fiat. I think that maybe you'd have a word to say about that, Sheldon, about how the fact that institutions, when they come to the banks with pension funds of citizens, of regular investors, small investors, and when they come with enterprise funds and enterprise monies in there, would that make it easier or even harder? Because, as you mentioned, size wouldn't matter. The size of the funds is not the one that would matter, but maybe the typical, the types of the funds would be the ones that matter, and we'd be able to protect it better.
Yeah, well,
what do you think?
The big drama that's playing out, and we're going to be seeing it really develop, is who's going to be running the money? Is it going to be the banking system that's going to be defined just by software rules, and payment companies like PayPal and Square are going to be our major institutional providers, or is it going to be a big scaling up of the providers and a scaling down of the banks? I remember I was with my father one day when he bought me bubble gum when I was a little boy, and I said, "How do they make money? They only get 1 cent per bubble gum. Like, how can you make money selling something for 1 cent?" And that's the whole magic of institutional movement here. There's the institutional on the money side and on the provider side is so massive that a 2% adoption rate is a tidal wave of adoption. So if we can get to the point where institutions who are investing, like the pension funds you're mentioning, if they're just need a little bit of exposure, like they put their little baby toe in at 2% of their assets, you have a tidal wave, and the system today can't even handle it. So it's really adoption. It's really adoption enough to even try it, and then everything is a game changer.
Is a participation of maybe funds and more institutions make it easier for you as a banking service to receive their funds compared to private enterprises and private companies' funds and other investors' funds? Or is that the same for you guys?
No, it doesn't make any difference for us.
Doesn't make?
As long as you pass the AML KYC, we monitor the transactions, you are okay. And just what you said, so it looks like by this 2%, we are seeing Bitcoin 100,000 soon. Right?
Way to go.
Because I think that's what we all are waiting for.
I'm a seller. I'm a seller at 90.
You are seller at 90, okay.
Do you think KYC services that would be more strict, would they be more strict or more easy? The AML services, requirements, sorry.
See, these requirements are not very difficult. Obviously, as a person like you who understand laws and everything, for you these are like just some basic fundamentals.
Right.
The problem in the space, what we have noticed since we are banking crypto companies, is that these fundamentals are missing. They don't know what is KYC. They don't know what to collect. So, and that's very normal, because when you have a new industry where new entrepreneurs and everything new is coming, of course they will not know. They are focused more on building the infrastructure. If Bitcoin was focused on building AML, today we have not had the Bitcoin, this $1 trillion industry. So I think that's not wrong. I think that goes a step by step. Now, because we are already at more than $1 trillion industry, which we can compare with some of the mega size, it makes sense that now we have to build these infrastructures. And that's what's happening. And funds from investors or big investment funds, if they are coming, it's good, because that's going to accelerate the, and I think that's what happened in the last 3 months. I think it's the institutions coming out. 2 days ago, we are going into a severe fear market. Last night, we went again back into the bull market, just because one institution investor came down and just claimed that now
I think that fits in with what I think.
Bitcoins.
I read somewhere that Elon Musk changes the financial markets in regards to Bitcoin in 280 characters, right? If he says that Tesla is investing in Bitcoin, then everything goes up. If he's saying that not, then everything goes down.
I can
like
summarize this to say that the larger the market is, then the smaller the effect of each one person, one investor, even Grayscale, the almighty, even the effect of each and every one wouldn't be as strong as it is. So the larger we get, the more spread out we get, then we'll be able to minimize the volatility of that market. So I can summarize that when investors and companies are not as aware of the requirements of KYC and AML requirements, which are legitimate on the regulators, that's why we guys have us lawyers and CPAs to deal with that. So I'd like to thank you, each and every one of the esteemed panel members, for participating in this.
Thank you.
And thank you for your comments on this. And if you have any questions, we'll be able to take him off the panel afterwards. I'm Jaguar Egal, and thank you everybody for participating.
Thank you so much.
Thank you.